Hello, this is Tom Cloud, and I'm here to give you an update. We haven't done one in about 3 weeks, and certainly I appreciate all the nice emails and questions where people pick up the phone and call. And what I want to do today is go over a few of those questions because I know a lot of you are interested. Let's start with the Bank of Japan. As I filmed this on Wednesday, we've seen gold and silver finally releasing, and with the Bank of Japan basically not changing policy and continue to say they will have quantitative easing and do whatever it takes to make the economy in Japan improve. We've been in a 26-year stalemate with basically hardly any economic growth, and now they've hired Bernanke as a consultant. So Helicopter Ben is teaching them how to drop cash and stimulate the economy, which we think will continue to be very good for gold. It also creates demand when we see Tanaka Holdings, the largest company that sells gold to the public in Japan, creating record sales every month as people move out of negative interest rates. Which brings us to the next question, which is the Federal Reserve meeting that's going on yesterday and today. And will she be yelling, be hawkish or dovish when she makes her statement this afternoon at 2 p.m. Eastern Time? Certainly by the time you look at this, that announcement would have already been made. But there's a couple things to watch, whether she's going to be, you almost feel like they backed themselves in a hole where they have to raise rates by December. If they do raise those rates another 0.25%, you get the initial drop in gold, initial drop in the stock market, and then a few days or weeks later, you not only see it come back, but you see it come back stronger. But evidently, a lot of y'all read the article that was posted about footnote number 8 in the Federal Reserve meeting in Jackson Hole, Wyoming, where basically the Taylor rule, which was to be put in effect by the Federal Reserve, that would basically be a formula to control whether rates went up or down. And what has happened is the Fed has raised rates 0.25% in the last 52 months. One raise when everybody's predicting 40 something times they would raise rates. Rates been raised one time. And if they went by the Taylor rule, we would have a negative 9% rate. So then you would have negative interest rates, and you would have people bailing out of bonds and moving into gold, like what's going on in Japan today, right this minute, as we're talking about, because the interest rates, the negative interest rates stayed where they're still charging holders to put money in their banks. So this is something that if we go to negative interest rates, you're going to see people liquidating bonds very quickly. The next listener writer wanted an update on the SDRs, and we're in that 2-week window where China is supposed to announce their gold holdings to the world. And certainly we've always thought it would probably happen right after the Federal Reserve's statement later today. And I don't mean they'll make it today, but sometime in the next 7 business days, we should know what those rates are, how much gold they reported to have to the IMF to get their special drawing rights. So that's very important. So remember, when you wake up on October 1st, there'll now be 5 currencies, the original 3 in 1969, the US dollar, the Japanese yen, the British sterling pound. And then in 2000, I think it was 1 or 2, the euro came in, and now 15 years later, the Chinese yuan, renminbi will be given those drawing rights. And what you got to remember, all those are going to be in the basket. They're still going to be separate currencies, but they'll control a weighted value based on their performance against the other 4 currencies. And that's when we really think we'll see the yuan go up, because there's already between 10 and 11,000 central banks, international companies that say they will, at that time, demand payment in the Chinese currency, which will strengthen theirs within the SDR box and still give them the flexibility out there to drop rates when they need to improve their exports. Basically, they will be in control. Now, the other thing that a writer asked about, which is a very important question, is will China now liquidate the U.S. treasuries, and will Japan liquidate the U.S. treasuries? Remember, they hold over $2.6 trillion, which is, basically 10% of our stated debt of 19.5 to $20 trillion. So will they do it? And certainly if they want to, they will, because they want to issue bonds in their countries. So they'll sell the U.S. bonds, which will put us in the real dilemma because we have no liquidity right now. We have no liquidity for bonds right now when they have the auctions. The Federal Reserve's having to buy them now. And then along comes the letter that probably 18 or 20 people have written me about saying, what's this about October 14th when you have to have your money market put into U.S. Treasuries if it is an IRA or a 401k. Now, there's a lot written out there about it. I'm not an expert on it, but certainly if you read it, it looks like the $7 trillion market out there of 401ks, the money market part, not what you have invested in stocks or bonds, but the money market part will be mandated on Friday, October 14th, to move from commercial paper money markets to treasury bill money markets to take some of the pressure off of the U.S. Federal Reserve. So people, this could happen. This is scary, but the unwritten story is what happens to the companies that are using commercial paper and buying from these major brokerage firms on uncollateralized loans based on their good credit. Well, there's still billions of dollars needed monthly in that market. So you've got to realize that when the commercial paper market has to go out and go to traditional financing to meet their debts, that's going to be bad for the U.S. economy. So this thing compounds and compounds and compounds. And all you can do is sit out there and get your money out of your money markets and into hard assets before you're mandated, and then you have no rate. We have seen right in the last 3 months more demand for self-directed precious metals IRAs than we've seen in years, probably since 2007-8 timeframe. And you've got to realize that you need to get into that because you have designated, allocated gold and silver in your account, and you can store it a couple different places. But please don't get into believing you can store it at home. If you do, I'll send you some articles that have been written where the IRS is getting involved. And you cannot do it according to the IRS, no matter what rules people tell you. So don't get caught in that. Go through and get you a self-directed precious metals IRA. Call our office at 800-247-2812, and Dan, Kathleen, or I will walk you through that. Venezuela. One writer will know if I had an update on Venezuela, and I do. Our minister that goes down there has now said, and it's been written in different things, it's over $100 for a dozen eggs. 2 months ago, 1 ounce of silver would buy you 6 months of food. Now it's over 9 months, and the official inflation rate in Venezuela has hit 700% for the year 2016. Gold has now said you can buy, for 3 ounces of gold, you can buy 4 houses, where 2.5 months ago, it was 1 ounce of gold would buy a cheap house. So it's continuing to inflate, and it's only getting worse in Venezuela. We've talked about commercial paper, the SDRs, Venezuela, and I want to talk briefly about my company, and then we'll close. when you buy something from us and your money comes in, it goes in escrow. I do not pay any supplier because of my 40-year reputation until I have a shipping tracking number that your order has been sent. So your money never leaves and goes to another dealer. I have about 5 emails talking about companies that gone under, J. David and Company in San Diego, and Hans Tolving in California, and 200 or 300 others. I don't recall the Territorial Mint out in Washington. Well, people, if it doesn't, we would get your money back to you. So you especially right now want to deal with someone that's escrowing your account, and do not use it until we pay for your order when it is shipped, whether it's next week or next month, and if delays get bad. So that's very, very, very important to know. And hopefully you've read about my low cost storage program on SRS Rocco Report. Steve and money manager Vic Patain have done an excellent job as I reviewed my storage program that they wrote about on Steve's website. So please go read about it. 0.2%. I mean, we've got money coming into that from Steve's listeners where they can buy a new $10,000 purchase, get an account in IDS, Delaware, or Canada, and then you can move all your other metals and enjoy my low, low rate that nobody else in the world has. So please look at that. Our storage fees are low. And then I want to close by saying, once again, we charge you 2.5% on gold, 3% on silver purchases. We pay the postage and insurance. And when you're ready to sell it, we give you all the money round trip. We survey our wholesaler network, see who's paying the most for your product, and then we tell you where to mail it. When you mail it, it locks in the price. And so we're getting you the most we possibly can. So I don't know anybody else out there that makes 2.5% to 3% upfront, pays the store and pays the postage and insurance, and then when you liquidate, charges you nothing. This is very, very important because I just got sick on a account. Somebody, son, heard me on Steve's video, told his mother, known that she had bought a lot of gold and silver from a telemarketer. 62%. The day one when she took delivery, she had lost 38%, 62%. I analyzed it for her. And then if you buy from me, you may be 3% in the hole on gold and 3.5% because there's a wholesale margin too. So let's be wild and crazy and say you're 96% to the good on silver and 96.5% to good on gold day one. That's all you've got to go up to break even. So Steve wanted me to mention that again, and I think it's very important that you realize that and know it. So basically, I've covered everything that was asked from the listeners, you that have emailed me, and certainly you can go to our website at cloudhardassets.com, and you can send me a personal message if you've got something you want me to talk about next time we do this, and we'll continue to bring you honest, straightforward information. Till next time, this is Tom Cloud signing out.